G'day, Tom Gehrman, sales representative at Apex Results Realty located in Burlington, Ontario. I operate from Grimsby through to West Mississauga. This specific post is about buying. Not necessarily buying real estate, but when you're looking to purchase some real estate, or if you currently own property and you've done what all other good Canadians do, you've paid that mortgage down, and you're hearing all the push, the bragging rights by the media, people talk about refinancing, using their lines of credit, credit cards, and they're going out and they're buying all sorts of things. Not necessarily things they need, but the toys or the wants. I want to go to Disneyland and bring my entire family of 8 with me. I want the toy. I want that Sea-Doo. We want the cabin. It's 2013. I would be cautious about that. Money right now to get it is dirt cheap. You can refinance your house, incurring costs on that. If you do not have a secured line of credit or a line of credit right now, you can get one. And of course, there will be some charges to get that. But if you're going to get it, do try to be careful with it. People are using a lot of credit right now. Not everybody, not 90% of the Canadians out there, not 70%. But there are people who have never experienced a real recession, or heaven forbid, something like what we went through in the early 80s. It is a cycle. We've had it pretty good up here. So please, if you are looking at buying in the next few years, and you keep seeing all those toys you want to pick up, take a look at how much you're spending, take a look at everything else, and will you be able to afford, when you talk to the mortgage lender and they do the credit check on you for the gross debt servicing, if you've got car payments, a mortgage on a cabin, other toys, credit card debt, all of that is counted against you. So if you're looking to buy, pay it down before you go to open purchase, including student loans, which are getting bigger, aren't they? The other side, if you own a property and you're experiencing some minor financial difficulties right now, by minor, you're looking at saying, I barely break even. Instead of going out and refinancing, which can have its own problems if rates go up in future, no one likes hearing this. Evaluate why you're in that situation. Can you cut certain things out? If your monthly expenses are too high, get rid of your cable package. Stop eating out for a little while. Cut back. Try to deal with it that way. The quick, easy fix is to refinance and go from, I have 60% ownership of my property, to I have 25% ownership of my property, and I paid off this loan and this loan and this loan. You have to evaluate very carefully the cost of those loans. If you're wiping out credit card debt, which is at 18%, and your line of credit's at 4%, that makes sense. If you wipe it out, and unfortunately you end up running up that credit card debt again immediately, you're in the same boat. In a way, you're also much worse off, because now you've refinanced the property. It's so easy when money's in our hands to spend. I know a few buyers who've had to step away because this has happened, and it's a nasty lesson. Better to learn it before you purchase and get yourself into real problems, and better to think about it carefully, because if interest rates go up and you are at 85% value, which means you only have 15% equity, and there's a dip in the real estate market, you may not have that much equity left in the property. And if you're 35 and doing it, it's different than if you're 55 and doing it, if you wish to retire by the age of 65 or 67. Just some thoughts for you to consider. Please be careful. Everyone's talking about how bad we are, how much we're spending. It's not everybody, but there are some people who are doing it because they don't know any better, or they're trying to finance a lifestyle. I am not standing here, or rather sitting here in judgment on this. I'm simply saying be cautious. I'd rather no one lose their house when an adjustment comes, or if interest rates go up from 3% for 5-year fixed to 6% for 5-year fixed term. They refinance, and they're out of their house. You take care, enjoy the beautiful weather, and remember, always stay positive.